Hello traders, Mark here from the day trading room, and a bit of a different video today for you. I captured a live scalp tape read trade on Friday evening. The time of this trade was around 6:30 London time, so putting it into perspective, that's about an hour and a half before the close. So volume, let's put a bit of backdrop first before we start the recording. Volume's very low on Friday, well, especially this time. You can see there on the volume bottom right, I've got the Dow 1 minute, and you can see the volume very low, and just generally the range of bars is low, and it's the sort of environment we're in at the moment. Very different to August's action. However, with a bit of tape reading and a bit of pre-planning and planning the trade and being patient and waiting, there are still opportunities out there. Obviously, the more volume, the better when you're doing a pure tape read scalp trade, because you'll write quicker, you can get your first scale off quicker. And as I mentioned in my last video, I have adjusted my money management strategy to suit the decreasing volatility. So I'm far more aggressive with my first scales. When I say aggressive, I mean I'm taking far more contracts off far sooner, because of the less likelihood of the market continuing and giving final targets. But anyway, here's the layout of the screen. I've had to squeeze all this in on my laptop to record this, so it's not my usual layout that you will see on my other videos, but hopefully this is going to give a good sort of feel of what's going on. So we've got on the left hand side there, we've got the time and sales for the YM. In the middle, obviously, we've got the depth of market for the YM. Top right ES 5 minute, and bottom right YM 1 minute, and I'll flip the ES 5 minute to a Dow cash in a minute so we can see what's going on. And the scale's a little bit skewed on my tick, so I will adjust that in a moment. So that's all squashed up, so hopefully we can see what's going on. And I normally won't have any reference at all to P&L on my screen, nor will I have any reference at all to entry price. So normally, the default is when you take an entry on TradeStation, you get that pink bar that shows you your average entry point. I don't like that. I get rid of that. I color that black because I don't want to judge the market in relation to where my entry is. I need to judge the market on its own merit. But for this purposes, I've left it on, and also left on the P&L. An earlier trade before. I don't normally use TradeStation, by the way. Those of you don't know me, I don't use TradeStation. I'll only use it to get the free charting, a great platform for that. And earlier I did a trade but changed my mind pretty much straight away. I did capture that, but I decided not to include it. Nothing really exciting about that. Literally took it, didn't like it, came out, scratched it. That's why the closed P&L is $25. So I'm going to just use an 8 lot today, reducing my sizing when the market is slower. Obviously Friday as well. Not a really great setup, but something I quite like to do, but not one of my favourite sort of continuation great volume pullback drive, and those I'll be all over and getting some good size on. But this one, just use an 8 lot, and we'll play the tape and we'll talk about what's happening here. So really the premise of the trade is this: good uptrend for 3.5 hours, 4 hours, and I'm looking to buy into stops under this support here. I'm looking to, the people who have been disappointed with the fact that we couldn't go to a new high, so the double top, those guys there, the bulls in that who have been in this, I'm going to look for them to take their trade off. Sellers to come in here as we break that low, and I'm expecting a little push back up. So it's basically fading that classic lower, 1, 2, 3 pattern. Whatever they call it, the pattern basically that says the trend is broken. So I'm fading that. So there's my 8 lot in there. I've got my 8 lot in there at 99, and I get filled on that at 11.899. Oh, sorry, it's not pink. It's like a purpley blue color to note the entry point. Anyway, that's the premise of the trade. That's what I'm looking for. I've got a 11 point stop in there. Probably give it 15 points maximum, depending. I don't like to give it too much because it is low volume and I'm not expecting much out of it. There's my first scale marker there at 909, which is the open, and that's the sort of way I'm playing it. A couple of things I'm a little bit concerned about. Obviously a double top. Not too happy with that. The fact that it has failed, and it's really almost a triple top, because if you look earlier in the day, it was a high then also. So that's concerning me a bit. So yeah, I'm not going to go crazy with it. The fact also that we have the VWAP's quite far away, so maybe buyers are shutting off slightly. So not expecting much out of it. Anyway, let's do a little tape reading here. What I've spotted now is that 130 lot sitting there at 11,900. See him there's 130 odd. I don't know how many years. Maybe he's 120. Maybe he's 100 mixed with others. Now he moves down. So he puts a 60 lot there at 894. Now I want to see what happens to him now. This is a good turning point. He gets filled. Okay, 40 lots or so gets filled. I don't know what it does with the other 20, but you can see on the time of the sales, 94, 32 go through, and a lot more bits and pieces there. So what that's telling me is, which is why, by the way, just to mention, in tape reading, and I talk about this a lot in the tape reading program, time and sales and depth of market, you have to combine the two. You cannot tape read by just using the time and sales or the depth of market. You have to use both to see the complete picture. And that's an example there. You've got the guy coming at 900, he doesn't get filled, he moves down to 94, part of it. He does get filled, looks like he's working a little bit more now, manually, it doesn't look like an algo there. That's why we're getting a little bit stuck now. But I now want to see what the response is to that. The market tries to probe lower, and we pick up a little bit of buying interest. Just changing the scale now to the ticks because that's annoying me. I normally have it on a fixed minus 15 to 1500. But because I've been squashing the charts about and what have you to get this recording on, it's messed that up slightly. That's better now. I can see that in those into perspective. They've gone lower, held lower. Now we're getting some good strength here. I like this. We've got some green coming through the time of sales, depth of market. We're pushing up a few ticks. Always bear in mind with this, guys, this is low volume. This is slow. We're talking 4 or 5 ticks movement when we see flurries. When we've got great volume, we get 10, 15 ticks. That's the difference. But we can still read it. We'll still try and we'll still try and make some money out of it. Just changing this the way what I've done there now is I've cancelled that 8 lot stop and I've put a 4 lot stop in there, 88, because what I'm doing is the fact that we push lower, push back up, and now we're starting to push lower again. I will cut half of this if I don't like it immediately before that stop. If I see something I don't like, perhaps another big order coming on that doesn't get filled, it's important to notice the difference between an order coming on that does and an order coming on that doesn't get filled. That's something I talk a lot about. I will ditch half of it. I'll cut half of it straight away, reduce my risk if I don't like it. But I'm giving it a chance. At the moment, I'm happy with the position. We've done exactly what I've wanted to do. We've only had 6 or so ticks heat, which is no problem at all. We've waited for that little push under the support there. It's holding under here, which is something going against it. But now this is key because I want to see now what happens if the sellers, as if there's no real interest from the sellers at this point, then I can assume or hope and stick with the trade that buyers will step back in and will start to push back up at least to my first scale point, if not higher. And ultimately, I'll see in a minute, I'm looking for that 12,000 cash level, which is the sort of gap fill level. That's got to be my final target for the trade. That's got to be what I'm expecting the market to do, and I'm just trying to pinpoint the entry using a bit of tape, using a little bit of short-term price action to capture that. So there's the Dow chart. I've just put it up there, Dow in the cash there. 12,000 is my final target for that, and we're looking a bit better now on the tape. We've got a bit of green coming through. It looks okay. I'm happy to sit with the trade. Could do with the ticks being a little bit stronger, but the fact that the ticks held lower for 4 or 5 minutes and the price didn't really get too pummeled encourages me. I'm happy with the trade. I've got no need to do anything with it so far, but I've got my scale there at 909, and it's taken a while now. It's taken a while, but this is the sort of way we're having to position ourselves now, and having to, a trade that took a while in August would be scratched straight away because of the volatility. A trade taking a while now, you've got to weigh up whether you've got to be patient or whether it's a bad trade, and that's the sort of thing you've got to, as a trader, you've got to make up your mind yourself. Am I in a bad trade? Is it taking a while because I've misjudged it, or is it taking a while literally because the volume is so low and we just have to wait for things to come in a little bit longer? But I'm happy with this. So I'm sitting here with my 8 lots. We're still there. We're still long, sorry, should I say, at 11,899. And you'll see me now start to get a little bit a little bit impatient with it. I think, okay, I've got the marker, I've got the first scale in there at 909, but what I probably will do, and what I do, is reduce the order size to a couple of lots, and I'll work it into a flurry higher. If we get a flurry higher, I'll push it in, because at the moment I'm still slightly concerned that this pullback here will be sold and they'll go to new lows. So that's why my mouse is sitting there ready to ditch it. If I see something I don't like on the tape, I'll come out and I'll hopefully get away with a 5 or 6 tick loss. If not, there's my stop. So no problem at all. We've got to accept the risk of the trade. Premise of the trade is what it is, and nothing to suggest that I should be closing the trade yet. So just sitting here watching, constantly reviewing. I'm just looking. I'm not obviously completely intent on it as you are with your entry. You're in it. You've just got to let the market either reward you or not. But I'm reviewing. I'm constantly reviewing. I'm looking at the bid. I'm looking at the offer. I'm looking at the time of sales, and I'm just waiting to see what the market is going to do. Now here's a bit more strength coming in now. A bit more of a flurry, a bit more of a bids stepping up that aren't filled, so that's encouraging me a bit. That's more interesting, and now I want to see if they get even more aggressive and start taking offers. They're pushing up a couple of ticks, we're scraping the barrel a little bit more, this is good. I like the fact that the bids aren't being taken, or when they are, they're being replenished pretty quickly. So I get encouraged by this. But I don't know how fast it's going to go. I don't know if it's just one buyer just picking up a couple of hundred lots, or is this great? Is this what I've been after? So I start to work a 2 lot there at oh 06, and this is what I start to do now, because I want my premise of when I'm tape reading and scalping. And by the way, I just put another lot in there at 07, another lot at 09, and then one at 08. So just to try and I get the fill at 07. I've got 2 left, 08 and 09. It's just to try to make sure that I do get some off the table as the market pushes in my direction. Now, those of you who've taken the course, and those of you who have looked at the other videos know that my style is to take risk off in the first impulse in my direction. So I'm pretty pleased with it. I'm not okay. I could have left the whole lot at 09, but I wanted to make sure that I was at least working some. So I think we've got 6, 7, 8. 6, 7, 8, and 9. So that's okay. That's acceptable. And we've got 3 left. I'd take another one off there at 10. So I've got 6, 7, 8, 9, and 10. So that's okay. And I've got 2 left. So we've scaled off quite aggressively. But the fact that this trade took quite a while, and the fact that I want to make sure that I'm not getting caught, and also that making sure that the trade is profitable, is why I'm just trading so aggressively. Now the tape looks great. It looks great. We've got strength coming in. I take another lot off there at 16 and cancel that 19, because I just see it struggling. Despite the strength in the tape, I see it struggling to break much above the 16. What I call unexpected response. Okay, we're struggling at the 16, even though there's a lot of green coming through, which is why I talk about it time and again. Time and sales, depth of market, you need them both. Probe to the 17, the 19, just want to see if it continues. Does it continue, or does it come straight back down to the 16? I've got an order in there at 29 for my last. That will take me to. In fact, what I decide to do now, actually, I remember this looks great. This tape looks strong. However, we've had this where we've seen flurries of strength and bits of weakness coming in, and one thing I will note is that if we can't break this high now, there are going to be a lot of buyers who are going to run for the door very, very quickly. So that is in the back of my mind, because this will be the second attempt, the third attempt at it. So, but I like the strength on it. So what I've done there, I've just reloaded a 4 lot, and I'm just thinking, okay, if I can get a little pop lower, I might rebuy. Actually, I might rebuy and then look for highs, because I like the idea of it. But then I change my mind and I say, okay, and this is when I start thinking through what we just talked about then, of case of, okay, if buyers can't, if this market doesn't push through and start maybe filling gaps or getting a lot of strength coming to the last hour as well, they're going to become a little bit concerned, and we may well start taking out that swing low. So that's what I'm thinking. If we do take out the high, fine, great, I'm positioned. I've got one lot in there either way. By the way, one at 37, which is about 12,000 cash, and one at 29. And what I will do, the way I'll work that is, if it just grinding up, I'll leave the 29 and get the fill there. If it's powering up and it looks great, I'll pull the 29. But because the volume's so low at the moment, I want to be ahead of the queue. Even if I've only got a one lot, I want to be ahead of the queue, or even more so with the one lot, to make sure I get the fill. So that's why I've just got those positioned in there. And I'm still half thinking, yeah, that's a nice little trade there. Could I get a little more scalp on it? And I changed my mind in the end. I think, okay, well, it was Friday. It's not a great setup. It is a setup, and it's worked. I've come out a touch early on it. I think the best was a 16 on the exit, but the rest of it was in the 8, 9, 10 level, which is okay. But we're slowing a bit now. We're slowing down a little touch. There was a little jerk with the computer by the look of it there. I think that's the trouble with the video capture. Every so often we get a little bit of a freeze. But anyway, same sort of, nothing's happened since then. We're in the same position here. I've still got the one lot left, and I'm looking for that 37. I've decided now actually to pull that 29 and say it's either going to be 37, which is about 12,000 cash, or not. And even though it's only one lot, these are the ones that pay you. And actually, looking back on August and when it's volatile, I would leave half or more running for those trails. So that's when it really would pay you. You take the first scale off very quickly at 10 or 15, and then you hold a good batch and scale into take pulses and tick strength if you're long, obviously. So the pulse is high, take another one off, again, another one, another one, another one, another one, another one, and you could be on, as long as you don't run out of bullets, of course, you could be sitting there nicely on a 100-point move. And looking back at some of my videos, you see a couple of times I got a 100-point trade on the last scale, which helps even if it's only one lot. So still sitting here with just the last lot. It's a winning trade, whatever happens. It's $370, and whatever happens on the last one will happen. I just start to look at this chart now, and I start to think, I don't like the fact that every other day we have never really gone too far from the VWAP without coming back. I'm looking at the open. I'm looking at the fact that we haven't filled the gap. I'm looking at the fact that we are down on the day. So even though the price, we've got this sort of mixed price, even though the price is pushed up for the few hours, we are down on the day, which you can't forget that. So that's not quite the same as if we had the exact pattern but we're up, say 300 points or 200 points. So different scenario, which is why we're scaling aggressively, why we're only using the position size we are, and why we've managed it in the way we have. So just sitting with this last lot now. I've got to stop there at 02 just to make sure the commissions are paid for, even with slippage, that it's a good trade or whatever happens. And I'm watching. I'm just seeing us sitting here. I'd like to see us break that high again. I do start to notice us struggling now, and I just think, I'm seeing me there hovering over that cell, thinking I don't like it. If it hasn't gone now, there's going to be guys who are in it in full size who are getting nervous. So I'm always thinking about the other side of the trade. Who's going to cause fuel to the fire, whichever way. And actually now what I do is I look at the ticks there. I put a horizontal line on the ticks and use that as a stop. You see me saying, okay, well, if the ticks break that minus 200 level, then I'll ditch it. And that's probably going to save me a few ticks rather than waiting for the stop. And actually, just as I've done it, they break the level. So I just come in, I cancel the stop, and then put that sell order there at 07. So that was the end of that trade, and I obviously cancelled that last limit. So that was the end of that trade, $410 or so, a little bit from before, so around the $400 mark. Nothing fantastic in terms of final targets. Shame, but you can see how the trade managed. How I decided to scale a bit aggressively early on. It took quite a while. The premise was okay. Didn't like the fact that it was taking quite a while, even though the volume is low and it's to be expected. In an ideal world, it goes your way straight away, and you get that push up, you get the scale off, you've still got the momentum there, you wait for the next probe up, you take another scale off, your 10, your 20, your 30, and that's always what I'm looking for with every trade. That's what I'm planning for. And as I brought up that Dow Cash 12,000 was my ultimate target, and then in a different trade, if that had pushed up, if that had probe lower, taken my buy, pushed up, and then carried on pushing, it would have been, a great, fantastic trade. But it wasn't. But it's worth including anyway, even though it's a profitable trade. And this is the why tape reading can be so beneficial, because even though it wasn't perfect and it didn't work out as I liked, the fact that I'm just still reading the pulses in the market, seeing it slow down, seeing it, the direction it moves, how to scale, and just generally trying to get a feel for who's caught, who's doing what, and then comparing that to what you're actually seeing happening in the price action, allows you to take the trade. And now, actually, if you bring up Friday's chart, I haven't got it to hand, but if you bring it up, you see that we actually fell off quite hard after that. So it's almost 7 o'clock, and then after that we just came off quite a bit. So it was the right thing to do. So anyway, that's something a little bit different. I hope that's of some use. As always, you can email me, mark@thedaytradingroom.com. Go and have a look at the site, thedaytradingroom.com, and check out the tape reading program there if that's something of use to you. As always, though, make sure that risk is managed. Get that hard stop in, or whatever you need to do to manage the risk. Just make sure that a trade doesn't go against you further than your allocated risk level, a risk tolerance, because that's so important to manage capital. Okay, guys, take care. Back with another video later in the week.